to another episode on Prophecy Trades. Today's video, we will be discussing gold and just doing a friendly breakdown of 4 trades that were executed today in the New York session and the London overlap. So we executed 4 trades on gold, XAUUSD. We actually were 2 for 4 for the day, about 50%. But overall, we were up about 5% for the day. So in today's video, I'm going to break down what prompted me to get into the trade, get out of the trade, and how to basically maintain and be a successful trader in this volatile market. So with that being said, let's get started. So before we do a quick breakdown, we can see the first trade. It was about a 1 to 2 risk to reward, risking 1%, gaining 2. That was a nice win there. And then the second trade, we actually stop losses were hit with the 1% hit there. And then again, shortly after that, we were taken out of the market shortly after. And then price then went exactly into our direction. So we were a little bit too early there. And then we actually waited about maybe somewhere around maybe 45 minutes later, close to an hour. We actually saw a nice entry here. We could have had a better optimal entry down here. We actually entered on this bullish engulfing candle, and this was nearly a 1 to 5 risk to reward. So the 4 trades, there was 2% gain, minus 1%, minus 1%. So with just these trades, we were about break even for the day. And this last trade for the day set us up for a successful, nice run. And as you can tell, price is continuing to rally a substantial amount. This was about a 1 to 5. If we were to maintain and hold and just let the runners run, this could have been an insane amount, about almost nearly 15% gain just off this trade, but we secured the 5%. So let me jump down to another chart so you can see what I saw. So basically, we jumped on the chart somewhere along just before that, like I said, that New York opened about 6:30, and we actually saw some opportunities here. So basically, I'm going to try and reenact this morning of what happened. We're going to draw our trend lines from this tip of the wick here. So we can see we're touching multiple candles here, 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 and here. And let me see if I can bring in this a little bit closer to zoom in for you. So basically, we're going to grab it from this tip of the wick there. And we are going to grab it from this tip of the wick here. And then we actually grab it from these wicks here. Once again, we're not trying to compromise the body of the candles. We're trying to touch as many wicks as possible to insinuate a valid trend line for our bias. So we have trend line tap once, twice, 3, 4, 5. So for me, this was my valid trend line. Price came back up, respected this trend line here, and this was a potential short opportunity. Grabbing our fib from this swing high to this swing low, and we're gonna see that we are actually at that 61.8 zone. So we have a trend line, counter trend line, break retest. We have this new trend line. We have a Fibonacci rejected zone near that 61.8 golden zone. And then we have price action. So not to mention as well, we also have one of the critical things. We have a market structure shift somewhere along this region here. This is where we started to identify a shift in the market. So one, trend line, counter trend line retest, market structure, Fibonacci, and price action. So with those multiple confluences, we entered somewhere along here. Stops were somewhere along this region, and we are just taking it to the minus 61.8, and I believe it was about a 1 to 2. Stop losses, I believe, was closer to about maybe 25 pips or so. So there's that first successful trade, and then we actually saw price driving again and we're gonna show you my other opportunity that where stop losses were hit. And this is just for educational purposes for you to understand the markets, the good and the bad. So basically, we have this trend line here, and then I saw, I'm gonna grab it from this tip of the wick here, and basically I believe the entry was around 730. So this trend line must have been adjusted slightly higher. So basically this is exactly what I saw. I saw price come up, respect this region, this zone, this trend line. And then I saw a respected candle again, and my entry was somewhere along this indecision candle here. This counter trend line wasn't drawn, and I put my short position just on the close of this indecision candle, and I'm going to show you right here. And we were going to target using our fibs. We could have brought it from this swing low to this swing. So even still, I'm not going to draw it out the full way because obviously we got stopped out. This is just a learning purposes. It was about 30 pips or so, maybe closer to 25, and we got stopped out there. So there is that opportunity. We actually got stopped out fairly quickly within like 3 minutes. So when you're wrong, it's nice to know like you're wrong right away. So I mean that was nice. So then we moved on to the next opportunity. So then I did see price deciding to drive upward. And where was this? I believe the trend line was somewhere along this line. I saw this, I think there was a test. Oh, the trend line was a little bit tighter, I believe. There was a test bullish, and we had a bullish candle here. We entered here. Let me delete the old fib. And we were looking to take this up from this swing low to this swing high to that minus 61.8. And I believe we had maybe like a 25, 30 pip stop loss. And once again, got stopped out again. We were stopped out probably within probably 10 minutes, maybe 15 minutes max. So after these two trades, this pretty much wiped out our win over here. But once again, we stay resilient, we stay focused, and we trade with what we see and not what we feel. And we remove all emotion from trading. So again, looking for another opportunity here. I believe I drew my trend line somewhere along this line, and it sure did. Right here we have a tap respective trend line here, once, twice, 3 times, and then 4 times. And once again, it's the wicks of the candles. We do not want to compromise the body of the candles. I drew my fibs from this swing low and bring us down to that 78.6. So most importantly, we want to show and identify a market structure shift. You see how market structure shifted over here in this region. It was showing more of a downtrend, making lower lows and lower highs. It shifted to higher highs and higher lows, and then collapsed below this previous higher low here. So then I had to wait for a market structure shift here. The market structure then reshifted here. We're looking really bullish. This is a multiple tap trend line. The more taps, stronger the confluence. So I drew my overall move from this bottom of the swing here to the swing high for my overall market structure, for that higher highs and higher lows. And what I mean by, I'm saying from this swing low to this high, to this low, to this high, to this now low. So this is now the higher high and the higher low. So we have trend line, we have market structure, we have the Fibonacci, we have the 61.8. I believe I try to check for my trick, my fib trick, and we also did have a fib trick confirmation as well, and we were in that completed zone there. So Again, trend line, market structure, we have a fib, we have the fib trick, and we have candlestick analysis right here. We have an indecision candle, and we have a bullish engulfing. We could have entered here or here. So we have multiple confluences. For the sake of showing you how this morning played out, I could have entered here. I ended up entering here, and I took my take profit to that minus 61.8. And the psychology behind this morning was purely to basically recover. Again, it's not revenge trading, it's strategically, tactically recovering from the losses. At the end of it all, we were at break even, so basically we're starting fresh, and we're looking for one powerful optimal move. Dependent on if these trades were successful, I could have easily moved stops to break even. I would have been up hypothetically 2%, another 2 and some change, and almost another 2. That's 6%. I could have then used this as my risk-free trade and let this run and take this all the way up. But overall, this was a 1 to 5, up 5%. We are done for the day, and thanks for watching. If these videos are helpful on your trading journey for educational purposes, press the like button and don't forget to subscribe.